Welcome back. You're tuned into Chartbusters. You're on CNBC-TV18. Well, let's focus on one stock. That's Maharashtra Seamless. Remember, they reported a rather solid set of numbers, solid showing coming in from the seamless business. But to understand what's the outlook from here on, well, we're joined by Mr. Saket Jindal, the managing director of the company. Hi, Saket. Good morning. Thanks so much for joining in. Well,
good morning.
Oil prices have been very, very volatile. So could you give us a sense about how much of your business currently comes in from the oil and gas space, and further bifurcate that to how much comes in from PSUs, namely ONGC? Go ahead.
Right. So our oil and gas business from domestic is 25%, and ONGC is majority, around 20%. So there is a good growth coming in ONGC from the sector, means for L&T subsea applications. Subsea applications, which is we got an order from L&T for that.
So 25% of your business comes in from oil and gas, of which 80% belongs to ONGC itself. You take that point on board, Saket. Exports, how are they as a percentage of your revenues? When do you see them go back to that 25-30% mark?
Right. So exports is around 25, and we can make it 35. Especially in the US, and also Canada is opened up with the duties easing up. So we are in a position to gear up for Canada.
And just to clear the air, exports are a margin accretive business, right? You get better margins out there.
Right, that's true. Currently, it is higher margins.
Well, what is the differential between the domestic and exports in terms of margins?
In terms of margins, 5% higher in exports.
Okay, so that will help you all out there. One disappointment was in the ERW business for the past quarter. The margins came down sharply on Q on Q. Any one-offs out there?
That's right. So because of the raw material price fluctuation, and also there was some issue with the testing parameters. So that was the reason why the margins were low.
So what is the steady state margin then? And how much was that one-off impact?
Sorry?
How much was that one-off impact because of the things that you said, impacted the business there, ERW? And what is the steady state margin that one should look at?
No, like usually we have around 10% to 20% depending on the grade. The API grades have higher margins. But this was, you can say, a one-time feature which will come back into the same as earlier gradually.
Okay. Which is between 10 to 20%.
Right.
Okay. And, the acquired business, that's United Seamless, that delivered a blockbuster. Will it continue to outperform, or was it because of the product mix? Give us a sense out there. And if you want to detail an EBITDA per ton front, what should it be? We could break it down in three: Seamless, ERW, as well as the acquired asset. Go ahead.
Right. So the EBITDA per ton in Seamless is 18,000 approximately. And in the United, it was coming 25 to 30,000 recently.
Yeah. So what is the outlook? Mr. Jindal, we have the numbers for the past quarter. We're trying to understand from Seamless, from 18,000, what does it go to? ERW had a one-off, and that's why it was at around 1,000 rupees. But what is the outlook out there? And the acquired asset, that's the United asset that you acquired, which was at around 30,000. What is the outlook? Go ahead.
Yeah. So for margins, ERW, I would say, would remain at 10,000 to 20,000.
Okay.
Depending on the grade, means the higher grades would have higher margins.
Okay.
And for Seamless, say 20,000 is an average figure for margins. And for the new unit, because of more value addition in certain cylinder applications, we can get 25,000.
25,000. So from 30,000, you're saying the steady state should be around 25,000.
Yeah, a more realistic figure is that.
Right. And what about, volumes? Because I'm looking at your volume guidance for this year, 365 KMT for Seamless, 80 for ERW, TPL, which is your United States Seamless business, about 105. That's your target for this year. You are pretty much in line for Seamless and the United business. But for ERW, you've done just about 38% in the first half of this year of what you had targeted. Will you pick that up in the second half?
For which part you're talking?
ERW.
Right. So for ERW, we should pick up, and we will gear up because recently the testing procedure was taking time, and certain bottlenecks were there for hydro and for also making a double shift. So the domestic orders also, there is going to be some challenge. So we will, I think, export, or we will get from other non-government sectors also, we will get orders.
So if we look at the guidance that you had earlier given with regards to the target for the seamless business, 365 kmt, for ERW 80 kmt, and for USTPL 105 kmt. Do you want to change this, or do you think you can maintain it, or maybe revise it upwards or downwards?
KMT means?
The 1,000. Yeah.
Right.
Yeah.
Just go again. What figures you're talking?
No, we have picked up the number, sir, from your presentation. You have given us your guidance target. So we want to know whether or not will you supersede that? Will you be able to exceed it?
Well, I think we will meet the targets, most probably, on target.
Okay, got it. The other couple of questions that we have for you is your promoter holding. You have consistently been buying. If I look at it from the Q1 of FY22 till date, your promoter holding has gone from around 63% to around 67%. Do you want to take it to higher levels? It clearly indicates that you're optimistic on business. But is there a target holding? Yeah.
We were planning creeping acquisitions to increase our promoter holding. And whenever the time is ripe and the market is, apt to buy, then we can increase also.
And what is your end game here? Are you looking to, at some point, take it all the way up to 75%?
Gradually, means it will take time, I think.
No, but is that your intention, sir? That's what we're trying to understand.
That's right. That's right. We have intention to increase.
To increase from 67% to 75%.
Means gradually. Means we cannot commit so much right now. But that is the general intention.
And you have cash of 334 odd crores in your books. Any plans with that? Is that capex, or you want to return it to shareholders? Maybe one of the ways you can increase your shareholding is by doing a buyback and promoters not participating in it. Just wanted to understand. I mean, you are sitting on cash.
Earlier, we were discussing between buyback and creeping, so we decided that creeping acquisition is a better option. So later on, depending on the government taxation policy, we will again review next year and decide.
And until then, the cash sits on your books, or does some of it also come back to?
We are looking at options to invest if we get opportunities. So wherever we get opportunity to invest, even if it's a diversification or related business, so we will keep our options open.
Okay, all right. Okay, all right. I just want to clarify, I recall post your numbers, there was a matter that was relating to a subdivision of equity shares that was not approved. And on that day, the stock cracked. You want to tell us why that happened?
No, I think the idea was we announced a bonus issue where we are doing a 1:1 bonus.
Yes.
So it's not a split, it's a bonus issue which was decided, which is on track, means expected.
Yeah, but it had a bit of a roadblock, right? Around a month or so ago, post your numbers. The numbers were good, but the stock fell down. So the assumption was maybe it wasn't approved at that time. So that's why, the stock cracked. You want to clarify on that?
Yeah, maybe it was some hitch or some misunderstanding, but I think otherwise it's on track. There is no ifs and buts now.
Okay, all right. Mr. Jindal, thanks so much for stopping by and filling us in with all of those details. Wishing you all the best and looking forward to chatting up with you at the end of your Q3 numbers as well. Stock more or less flattish, but from the lows of this year, it's seen a very, very good recovery. So you pull up a one-year chart or so, you'll see that one has seen a good rally. Promoters saying that their intent is to increase stake, but they'll have to keep an eye out on the pricing as well, up 60% in the last 1 year. Well, we'll slip into a short break, but a quick programming note: to fully commit to the cause of bridging